What's up, everybody? Welcome to PeezyFX Trading. I appreciate y'all tuning in to my YouTube channel. If you're new to the channel, be sure to hit that subscribe button. Show some love and support. Been putting a lot of energy into this channel here lately. I really want it to succeed. So let's get that algorithm working, man. Y'all hit that like button. Drop a little comment below. I'm open to suggestions of what type of content y'all want to see from me. For people who are new, my name is Ryan. I'm from Georgia, 31 years old. I've been trading for going on 4 years now, 3.5 roughly. I am an ICT student. I have poured myself into ICT, his mentorship over the past few years, and I've been seeing great consistency with his concepts, and I feel as if I am very capable to, with all due respect to ICT himself, I feel like I'm capable to teach people the fundamentals of his concepts. I have successfully turned retail traders into ICT traders. And a lot of people who was under my tutelage are now six-figure traders, funded and live. So I just wanted to throw that out there. I appreciate you guys rocking with me. Today we're gonna get into a trade review, Euro USD and Spooz. These are trades that were taken today in my Discord channel. I sent them out as a signal. If you guys are interested in joining, I will leave my Cash App information below. And as soon as you pay me, be sure to join my Discord channel. Direct message me proof of payment. And you can join a community of like-minded traders. We all trade ICT concepts. There's currently about 30 people in my paid group right now. So come join the team. So I want to start off by getting our replay bar and going back to right before New York Open. And we'll just do a little quick top down. All right, so it's fairly simple what I seen going into New York Open, right? I always use Asian session and London session to help me determine, what my daily bias is going to be. And I try to get in and catch the New York session volatility to catch the whatever I can catch from the daily range, the daily expansion. So right here on the hourly chart, we can clearly see we had price dip down after midnight, which is a clear indication of a bullish day. Here's midnight opening price right here. We opened up and we traded down. And at London Open, we had a huge run up. That displacement created a buy side imbalance, sell side inefficiency. And I was waiting on price to redeliver down into that area. All right, so this red line right here is annotating the mitigation block. And this is the last up close candle that was responsible for the shift in market structure. You see the change in the state of delivery of this candle as it took out that high. I was waiting on price to get back down into this level to see how we reacted. I want to highlight this hourly fair value gap, drop down to a 5-minute chart. And going into New York session, you see how we got this strong push down right into that level. All right, so we have our hourly POI, right? We see price reacting strongly to the downside. to dig down into that specific level, this hourly fair value gap and the mitigation block. So after that, I was watching the 1 minute time frame, and I was waiting on a decent pullback. I wanted to see price pull back coming into New York Open. And my goal was to get 10 pips above this high or 20 pips above this high. I always try to ride price up to the high itself and leave a little bit on as a runner to see if I can get 10, 20, or 30 pips above an old high. Straight out the ICT's handbook. I'm just going to hit the replay button and try to take you through my thought process on this trade. All right, so New York Open right here, and we have our current dealing range. We see that price has traded down into the hourly fair value gap and expanded out of it, like a huge displacement to the upside, bouncing out of the fair value gap. So at this point, I pretty much have my current dealing range on the 1 minute time frame. So you basically want to wait on price to turn around. That way you can find your current dealing range, and just like how we got this red line right here where that old high is, we also have, well, the last up close candle would be around right there. We have a fair value gap as well that is right there around that equilibrium level of this current dealing range. Price trades down into it, pulled the trigger, and we got a nice expansion to the upside, right? So I placed my stop loss down below this low. When I seen this happen, we got one final rundown. I think it was right here. When I seen this happen, I pulled the trigger again. Why? Because I noticed this fair value gap right here. I had it marked up, and I knew that it was a potential scenario that could play out, right? So when price traded down and took out this low, I figured that that was the run on sell side liquidity that we needed in order to take off and get up above these old highs, right? But as you can see, we worked our way up, traded up into this sell side imbalance before dipping down once more, right? Hit consequent encroachment of this sell side imbalance and dropped. We dropped to take out this low and to completely fill in this 1 minute fair value gap here. So I pulled the trigger again as that was happening. And from there, it was history. Play it right here. I closed partials as price did this. I closed partials again, and I ended up closing the remainder of my trade around here. I wasn't able to hold on to it to get the bulk of the move, but this is really how I like to operate. I like to catch these small dealing ranges, and I'll throw the fibs on here for you real quick. As you can see, price traded up. New York Open came. We traded back down into the kill zone level of this dealing range, and then we expanded higher, taking out this old high. And as soon as we took out that old high, we repeated the process. So from here, I posted in the group that Euro USD was at a really good spot for a re-entry at this time right here. Looks like we came back down and tested that level again. Right here going into London close. Price decided to take off. Here's another beautiful trade opportunity right here. You wait until you get that displacement, and you can't unsee these things, man. It'll eventually become so natural for you. That was another beautiful trade opportunity, as well as this one. We already got our bias for the day. As soon as New York session opened and I got on the chart, we already have our bias for the day. Why? Because we used what London session did, and also this midnight opening price, which is here. So ICT states that if you are anticipating higher prices, you want to be a buyer at or below midnight opening price. Well, price did not need to get back down to midnight opening price, right? We already have our bias, and we need to learn how to operate in small dealing ranges in order to catch a nice price swing, right? And from I bought here, I bought again here, and I closed my trade up here. And that is roughly, let's see, 25 pips on this trade, 22, 23 pips. So around 50 pips for the day on two different positions, right? And I was very content with that, because that's above average in this industry. Go ahead and speed this up and just show you what price ended up doing, right? The first blue line is 10 pips above that old high. The second blue line is 20 pips above that old high. And I'm gonna show you what this means and what's going on up here right now. So I'll jump back to a 5-minute chart. I'm gonna delete that. You know what, matter of fact, I'm gonna leave that on there, because this is that hourly fair value gap, and this is what we based our entry off of. Is we waited until price traded down into that 1 hour fair value gap and reacted from it and got in on the retest. So as you can see, I have this -1 standard deviation marked up. These are take profit levels. And based on our current dealing range, we anticipate price to move a certain amount of standard deviations from this dealing range, right? So what I did was I used this fib as like a confluence. I want to see how price reacts from specific levels above where liquidity is resting. In this case, this is our buy side liquidity. This is our next draw on liquidity. And you can obviously tell what price was reaching for, because look how the change in the state of delivery of the candles started behaving right as that old high was taken out. You see that? And you see price did not do it prior or after. That was what it was reaching for. Although I did not wait on that to happen, I feel like this run up right here got close enough, And but from this moment, I knew that this was a beautiful target for a re-entry because now we have relative equal highs, which is going to be, retail traders resistance zone, double top. And when price hits that double top again, they're going to look at it as a triple top and try to sell, right? And that's why you see the sudden burst in volatility because it runs right through that resistance level. So what I did was paid attention to 10 pips, 20 pips above this old high, and this -1 standard deviation, highlighted that, and I took the nearest the whole number, which, let's see, the negative standard one deviation is at 1.00308. So I rounded that down to 1.00300. And that is just an example that you can use to close out your trade. It's just little things that I like to do to just see the accuracy of the concepts that we're learning. So that's pretty much it. I mean, I could try to like break it down for you in detail as much as I can, but it's really as simple and clear cut as I made it seem. Like New York session open, I realized at this moment that we had traded down into a 1 hour fair value gap and reacted from it. So from here, I was just trying to find my way into this trade. I wasn't, I wasn't even on the 1 hour chart, but one time, just a quick glimpse to see that price did trade down into this level. It hit this old high and it bounced up. So from that moment on, I'm on the lower time frames trying to get in because I understand what's happening. This old high up here is trying to get ran. And I don't care what it does from after that. Like, I'm not going to pay attention to trading until New York open tomorrow. Because, I mean, this does look like a good buy opportunity. I'm not going to lie, it really does. But I'm not going to get caught up in the accumulation manipulation phase of this daily range. I'm not. And that's where a lot of people tend to mess up. They think that they see a solid setup and they wonder why it fails them. It's because you're not coupling time and price together. But anyway, I'm gonna move on to SPS 500, right? And it was kind of like the same thing, man. I was targeting an old high, right, which was relative equal highs. We have London sessions high here, and we have Friday's high here. Relative equal highs. This is a buy side liquidity pool, and on the hourly chart, I noticed that we had a 1 hour fair value gap right there. New York session open. I was busy trading Euro USD, and I typically don't look at indices until around 9:30, right? So essentially what I was waiting on was a retest from the expansion higher in London. We got it right there. We got that retest. Price traded down into these specific levels. And here's our 1 hour fair value gap right here. So once price got down into that level, the exact same thing from Euro USD. Dropped down on this 1 minute time frame, and I tried to get in sync with price action, right? And these are the type of setups that I get burnt on often, right? 100% transparency. I didn't get burnt on it today because I placed my stop loss safely below this low, and I gave the trade an opportunity to play out. Like I knew I had to give it room. Once I entered, all right, once I entered these trades, I seen these relative equal lows over here, right? And I said to myself, maybe this is the sell side liquidity that needs to be ran before price gets that expansion, right? I judged it wrong. I entered as price was coming down into this fair value gap. This was my point of interest. I noticed that 930 hit right here, and we got this purge of sell side liquidity right here. This run down and this big push up. These relative equal highs was in my targets. I was paying attention to these equal highs right here. I wanted to see them get hit, and that was another confirmation for me to go long. Price traded up higher and then displaced to the downside. Now, typically when a normal trader sees that, it's going to scare them and they will probably close the trade. But I had faith in this setup, right? And I did realize that we had this little area in price down here. And I knew that my stop loss was going to be good down there. And if price decided to get below this level, then I didn't have no business being in this trade anyway. Right. So I held on to the trade. Price reacted from it. And after that, I felt like I was good. We got another displacement right here. Look at the change in the state of delivery of the candles. Right. I'm just going to show you a couple opportunities that you could have got in. After this push down, we got a displacement to the upside, taking out this high. Right. That's your opportunity. This is the setup. It's fractal. Every single time frame will give you a pattern like this, right? And this is what we trade. Came down and hit it twice before expanding higher. Unfortunately, I wasn't on the charts at that time, but I was on the charts here, right? So this is a partial that I closed from here, right? I closed the partial here because I knew I was about to get back in it right there. So essentially what I was looking for was a retracement from this displacement, you know, just to develop some framework. Oops. Because we all know we have expansions and then pullbacks. And I wanted to see price pull back into a specific level. We got this last up close candle here that is coupled with a fair value gap. Nice. So I knew I was good. And my target got hit right here. And I closed the trade up there. And I got a runner on right now. I'm holding on to a trade on SPX 500 from this position, I believe, or no, it's this position. I closed this position out. I'm holding on to this position. And I also decided to hold on to a trade that I entered up here. And I'll throw that on the screen for you real quick. That's my first entry. This is my second entry. So to bring that into context for you, I entered this trade within this fair value gap here. I placed my stop loss. So I entered somewhere up here. I placed my stop loss roughly right there. And I don't know how. I'm talking about for the life of me, I do not understand how that did not get stopped out, but I'm glad it didn't. And it actually came down and hit that level again right here. And it still hasn't stopped me out yet. So I don't think. I've been on this call, so let me check it. Nope, I'm still in it. I don't know how, but I mean, anyway, I forgot to cut on the execution here on Euro USD. I just wanted to show them to y'all. And I forgot to mention that I failed right here. And what I did right here was just this is when I first got on the charts, I believe. Yep. When I first got on the charts. And I placed a small position up here to see if I can catch a runner. Because I noticed that price had already did this and expanded and pulled back. And I wanted to secure a position in case price decided to take off like it did right here. But anyway, drop that down to 1 minute. Got in right here from this POI. Then I got in right here from this POI. I closed a partial as price was trading up into this order block. I closed the partial after that high got taken. Closed another partial and got stopped out in profit right there. Had my stop loss right above profit. If I would have been paying attention, I would have drug it down and held it, but I wasn't paying attention. And I would have been able to catch that runner because I did leave some on. It just wicked down and barely got me. Literally barely got me. I thought that I was giving it enough room. Let's see. Let's look at this. 99815. All right, so that's where my stop loss was at. And I thought I was giving it enough room because I seen this fair value gap right there. I guess I misjudged it. I wanted to give this trade, the runner, enough room to completely fill in that fair value gap, but I didn't want to see it get no lower than that. And you see the consequences of that mistake. If I would have drug it down to about right there, basically, this is the candle that created the fair value gap. So close to the low, the opening or the low of that candle is where I usually put my stop losses when I'm trading this type of setup. Depending. A lot of times I put it below the swing low. It just depends. But just notice how price just respected this level so nicely. Completely filled it in. And then we had a displacement right here. And that was your final opportunity. Could have got in from this fair value gap and wrote it up for 20, 40 pips. That's it, guys. Really, that's really all I wanted to do is I wanted to touch on why I took these trades today, my logic behind it, take y'all through the thought process. Hopefully this will help people. Man, I really appreciate y'all tuning in. I'm going to be back live tomorrow morning around 8 a.m. and I hope to see y'all there.